Welcome to today's video where we'll delve into calculating the net profit ratio. The net profit ratio is a key financial metric used to assess a company's profitability. To calculate the net profit ratio, you need the net profit and the net sales figures. First, determine the net profit by subtracting total expenses from total revenue. Next, find the net sales figure by subtracting any returns or discounts from gross sales. Now, divide the net profit by net sales and multiply by 100 to get the net profit ratio percentage. For example, if a company has a net profit of $50,000 and net sales of $500,000, the net profit ratio would be 10%. A higher net profit ratio indicates better profitability, while a lower ratio may signify issues. Let's look at another example. If a company reports a net profit of $30,000 and net sales of $200,000, the net profit ratio would be 15%. Analyzing the net profit ratio over time can help track a company's financial performance and stability. Understanding this ratio is crucial for investors, creditors, and management in making informed decisions.